The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading. It's going to be an interesting Friday, folks. We had an interesting day yesterday. You start things off in negative territory as we get a hot CPI number. We start the day yesterday at about 45.80. Within the span by 9 o'clock, you're at 45.13. You talk about technical analysis, folks. There's nothing wrong with fundamentals. I love good fundamentals. I combine them. But you got to be watching technical areas on charts because this thing comes back up and touches it so close. You're talking about from 45.83 to 45.81. We touch that area, and then you sell off 100 plus points in the S&P. You end the session basically right near lows of 44.76. Market looked a little dire last night, just after midnight, even up until about 7 in the morning. You were in negative territory. The S&Ps have gained 30 points in that time, but the trading begins in about 22 minutes from right now, folks, on that opening bell. We get the NASDAQ 100 higher as well. We were up about 15,000 yesterday. You trade down to almost 14,500 overnight. Right now, you're positive by 15 points. You get the Dow up 26. We're actually below 35,000 overnight, reaching a low of about 34,870. You're trading 35,165. The Russell's back to positive by 3. Man, the volatility on the Russell yesterday. Russell very far above actually where you were coming in to that CPI data number. Russell trades above 2,100, and then you give up over the course of the evening. Folks, the percentages on the Russell, my goodness. I mean, you're talking about almost 80 points. You're talking about almost 4% from highs to lows last night, and then since then we're up 1.5% off the lows. Right now you're technically positive by 4 points on the session in the Russell. We jump over to crude. Volatility in crude oil as well, pretty much trading with the markets. Crude back above 91 briefly this morning. We're trading up 82 cents in crude at $90.70. You see the volatility yesterday, so we're right near the top of that range as we've just dipped lower even in the last few minutes since we came on the air. You jump down to the gold contract, off $9 at 18.28. Gold volatility yesterday as well, up to 18.43. You give it all back in gold, and we jump to notes and bonds. Interesting action. The one thing, as the market was kind of gaining back some of the losses it has, the 10-year, that was one trend, and one trend only, folks, to higher yields in the 10-year. You talk about yields. We're jumping over the number right now. You're talking about a yield in the 10-year, 2% on the dot as we speak. So we were above 2%. We've now recoiled a bit. You're technically positive by 9 ticks on the session. We were as low as 125.17 towards the end of the day. You basically end of the day at the low price and high yield on the 10-year, the 30-year. It's pretty similar action. We're off of the lows. We're up 10 ticks at 150.131. And we jump over to the volatility index. And there's a spike for you. We come into the CPI data, just get below 20, and just like that, we're over 25 overnight. Right now, you're almost flat. You're negative by 8 cents on the VIX. You're trading at 23.83, pretty much where we closed out yesterday's action. All right, so all the headlines this morning has to do with the CPI data yesterday. Fed doesn't yet favor a half-point hike or an emergency move. I was having discussions with friends just yesterday about this number. And, you know, I was saying if things are so dire, and this is all just understanding where you think the Fed may be, okay? Excuse me, if you understand where you think that impacts the economy, that's another whole conversation. But at least trying to understand where the Fed might be, what they may do, and how the market may react to that. Yes, that was a hot number yesterday. You could definitely make the case, I think, much more reasonably that all expectations now go to February CPI, which is out March 10th. That is the week just prior to the Fed meeting, which I believe comes then on March 16th. Yes, so I think you get a Tuesday, Wednesday meeting with the Fed coming out on March 16th. We get the print for February CPI on March 10th. Second Thursday into the month of March, we get the print for February. If you see an acceleration continuing, right? If you see the month-over-month number rising from 0.6 to 0.7 to 0.8 on an annualized basis, that is just bonkers, to put it lightly. I think the conversation persists. But as of right now, I mean, the Fed is still out there purchasing assets, technically. If things are so dire, I don't think they'd be out there purchasing assets, waiting 45 days to hike by 50 basis points. You could make the legitimate argument, if things are that out of control, as some are, that you got to pause those asset purchases and maybe you come in with an emergency rate hike. If things are so dire that you got to jack things up 50 basis points and the Fed thinks that, folks, we're still 5 weeks out from that. We're still a whole other CPI printout from that data, from that meeting. I don't think they'd probably be there yet. The market is already pretty well aware that you're talking about 7 to 8 rate hikes. Now, what's interesting is I was out there yesterday saying that, okay? And you have Goldman now. They're talking about 7. Likely past longer 25 basis point hikes. Goldman analysts, they're talking about 7 times in 2022 instead of 5. 7 times in the next year is what they're talking about. Each of the remaining meetings this year is what they're looking for. And this is what Goldman predicts the Fed will hike at every meeting looking like. You're talking about from March and upwards we go every single time, bringing us to 2%, as you would have, would go from a quarter basis point basically to 2% by the end of the year. Well, there's a case to be made for a 50 basis point hike in March, given the combination of very high inflation, hot wage growth, and high short-term inflation expectations. The indications from policymakers so far, this is a good one, are pointing to more incremental moves, according to the analysts. Most Fed officials who have commented have opposed. We saw one yesterday saying maybe that was in play, which kind of probably spooked the market. We therefore think that more likely path is a longer series of 25 basis point hikes instead. I was listening to Bloomberg earlier this morning as well, and somebody was making the point out there that they've almost lost the narrative. The market is unable to figure out where they're going to go from here because things are so out of control, and that is not good either. That's one to wrap your head around as well. But nonetheless, the market persists, folks. It persists with some strength, and that is for sure. Let's jump around to some of the FANG stocks. We saw some action yesterday. I'm lumping in Amazon, I should say. I mean, think about it, right? The FANG stocks were the big giant stocks, right? You got Facebook, which is the F in FANG, and they are just at about $600 billion market cap now, just over that number, I believe, as of the close yesterday, versus the companies like Apple pushing $3 trillion, Amazon pushing $1.6. I think Microsoft is over $2 trillion. You see how they've fallen. Anyway, Microsoft yesterday trades down almost $10 from the beginning of the day of $310 and change. You finish the day at $300 overnight. Microsoft right now, technically looking to open in the positive. You got S&P's barely in the green right now. We jump over to Apple. Apple shares 172. Remember that $3 trillion mark is at about 183. They're always going to get coverage anytime they oscillate around that mark. We're about $10 off that price. You jump over to Tesla shares. Tesla's been holding up pretty well considering the volatility in the market, just above 900. You take a look at Tesla, you put it on a daily. I mean, that's a nice little consolidation we got going on. Not sure that we're going to break higher or lower, but at least you got an area that you can build your trade. Maybe you're getting in here at 904. You're setting your stop beneath it. If you're looking to short that, I would let it get back up to about 940 and 950. You see, as it just kind of chops around 900 to 950 for the better part of 11, 12 days. And that's been a little bit of volatility in the market since then. All right, folks, stay tuned. We got 15 minutes to go until the opening bell. We got some equities with earnings we got to go over. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got markets open, and you open flat territory. I don't think we're going to see flat territory today, folks. We have a two-way market. You saw it yesterday right out of the gate in the opening bell. You trade higher and then trade lower to finish the day. Right now, you open in even territory. But as I mentioned, you're talking about from overnight in the S&Ps, to put things in context, you traded up 55 points almost from the lows. You had an overnight low of 44.54. We just traded up to a high of 45.06. Right? And you're sitting right at about 4,500. A nice round number. Man, Basil Chapman. Jumping around to commodities, crude right now, back above $1.90.91. We jump over to gold. Gold right now down about $7, and we jump to notes and bonds. Keeping your eye, we got the 10-year retracing some of the pullback we had yesterday, and that's quite a retracement. I mean, you're talking about, what are we at now? 12, 16 ticks that we've retraced back to where almost half the move we've gained back in the 10-year for yields. All right, jumping around to what else we have going on. Some of the stocks we have with earnings. Under Armour out with their numbers, top estimates, but shares fall as supply chain issues hurt growth. Really interesting looking at some of these equities, setting up trades, trying to see the potential volatility on either side. And I believe the economy is super strong right now. I'm not the only one, right? The market. But you're going to see winners and losers, but the only question is whether those companies can overcome the difficulties that they're all facing here. So Under Armour, let's pull up their shares first before we take a look. UAA is their symbol. They spike higher, they spike lower on the numbers this morning. You're opening, we're not open yet, excuse me. 50 cents or so in the negative. 19.50 closed yesterday about 20. And getting into the numbers, 14 cents versus 7 cents. They beat on revenue, net income of $109 million compared with $184 a year earlier. Net revenue North America rose 15%, international sales up 3%, big number. Gave an outlook for the transition quarter. Sales are expected to be up mid-single digits compared to the prior outlook of low. It said, however, this forecast includes about 10 percentage points of headwinds tied to reductions in spring and summer order book from ongoing supply chain constraints. That was the big one that kind of hit them there. You got analysts out there. So the forecast for Under Armour is likely on the conservative side. They keep pulling out of discount retailers and selling more of its apparel and footwear at higher price points. That's the analysts like that, and now expects to recognize almost $500 million in charges related to the plan for restructuring. as they are trying to restructure that company. This is an interesting one, too. Remember when this thing, even pre-pandemic levels, right? You had, they restated their earnings. You had the CEO stepping down, and then it comes out that the Justice Department, they might have been fixing the books. That was some of the volatility back here. And you have this equity opening right at about $20 this morning for Under Armour. We also had Zillow Group out with their numbers, I believe, jumping over. Yeah, and strong numbers after the bell last night. Zillow trades from 48 up to 59. You're going to open up about $7. That's quite a pop for this equity now. Keeping in context, you're going to open at $55. And you're basically opening at the lows that we saw back in November. You were up to $208, $55 for some context. Basically going to be just above where we were in July of 2019. We reached almost 52, but strong numbers for Zillow as well. Yeah, I had theirs 42 cents a share compared with a loss of $1.07. So they lose a lot less than the market was expecting. They also reported better than expected revenue, despite an $881 billion loss on its now shuttered home flipping business. Man, talk about going forward as a public company. You do well, you make billions. You do poorly, you lose billions, just like that. Expedia. Yeah, check this out. So Expedia. They're going to open up $13, man, this equity. So you spiked to 214, you're back to 210. Yesterday it was pushing. It wasn't pushing. Yesterday Expedia was trading at all-time highs at 200. I mean, on a day like yesterday, just jumping around for the travel theme, folks, Boeing, right? Pay attention to these travel stocks. It is not over. This rotation is going to begin, and it's going to consist, folks, because we're all going to be comfortable breaking out at different levels. Some people are already comfortable breaking out. Some people are comfortable now breaking out. Maybe they were exposed during the Omicron variant. Maybe now that the mask mandates are getting lifted across the country, you're going to have more people that are more comfortable breaking out in the next couple of months. Point being, we're breaking out. We're all breaking out. It's going to persist. And these travel stocks have a long way to go. Boeing was positive yesterday, in a day when the market got pummeled, right? You had travel stocks trading higher, and I'm not sure the airlines finished it out in the positive. Looks like they barely did. Delta, you're basically flat right now, but you had Boeing trading higher. You had Expedia pushing all-time highs. They're pushing higher again as well. Airbnb had a big day yesterday, finishing in the positive as well when the market got pummeled. Look at Airbnb. You're going to open up $3 today, probably on Expedia acceleration as well. Now, Uber and Lyft, we have Uber in my newsletter. Strong numbers, man. But boy, they gave it back quickly during their investor conference. The outlook, not quite what they were looking for. So basically, you're right back to Tuesday on Uber prices before Lyft earnings Tuesday night, before Uber earnings Wednesday night. They had some strong numbers. Long term, Uber's going higher, folks. That's why we have it in my newsletter. You pull right back to the 618 on Uber. Okay, that 618 was about $32 and change. That's the entire move from the COVID lows at $13.71 up to the highs of about a year ago. February of 2021, Uber reaches $64.05. All the optimism that we were going to get over this pandemic earlier than rightfully so, as the last year has shown us. And Uber retraces almost a full 50% from where they were. They retrace a 618 of where we were. That's also the area you chopped around for the middle part of 2020. So that's a nice trade, folks. You're not in Uber, $32, you have some nice support. You're at a 618 right now. And I imagine these travel stocks, and the point being, right, you think that the travel stocks are done going higher, folks? Look at a chart like this and how much Uber has to do once things get back to normal. Even a company like Disney, I mean, look at that retracement. Almost makes it back to the 618 as well, within a few dollars, from 79 to 203. Disney retraces hard. We've bounced, but again, look at the room that it would have if things right itself in that sector of the market. Airbnb, talk about a pullback. Twice it got above $210 last year. You're trading at 171. I mean, Boeing has some bigger problems than just the pandemic in terms of the planes that they were pushing out that were not safe. You back things up a few years ago. We're at 446. I mean, I got two channel lines here on Boeing. We're pushing up against that channel line we've been in basically since March. That's the upper portion of that. So you'd look for maybe a little bit of resistance there. But if Boeing's able to right its ship, get back in that channel line on a longer term basis, that will take a pop. But I imagine at some point Boeing will be pushing higher prices than 220. And then we got to talk Facebook a little bit, because Facebook, maybe that was the low. I mean, it depends what the market does, right? 216 was quite a price. I'm sure we all hurled the multiples on Facebook. I mean, you have a company that made $40 billion in earnings last year. Sometimes, I think we've all gotten a lesson in multiples, folks. If you're not aware of multiples, right? I mean, you can invest in the best company in the world, like a Microsoft or like an Amazon, but if you're buying it at 100 times multiples, yeah, everybody knows it's the best company in the world, which is why you're paying crazy multiples for a company. And unless they perform as perfectly as those FANG stocks basically have, the stock can pull back, even though they continue to grow, et cetera. Company like Facebook, it's really simple to understand. That company made $40 billion in profits last year. Okay? I mean, you don't have to wait that many years if you're making $40 billion in profits to make back the net worth really $600 million. Okay? That's 15 years of earnings with no growth. Here's the flip side of that. If Mr. Zuckerberg takes all the money that he's making from the properties like Instagram and Facebook, and he starts dumping that money into a failing metaverse conquest goal, that company's worth nothing. You know, there's a lot out there, but nonetheless, Facebook had a strong day yesterday as well before pulling back. You're at 228 right now. We'll be right back for the opening bell, folks. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got the S&Ps right now up above 5 points. We come into the opening bell with all the markets in the green. S&P sitting just above 4,500. You see where we were overnight, almost approaching 4,450, and we are right near, basically, we closed out yesterday's action as you're barely in the green. NASDAQ 100 in the green by 20 points right now. Dow up by 28. Jumping over, one of the other companies out with their numbers yesterday, Intraday, interesting concept, releasing your numbers pre-close by mistake, and they're horrible numbers. Not sure what's going on with that company, folks, but I would be careful about this equity. You traded down, now you're only down 10% on the session, but that's because this equity traded down 40% almost, 30 to 40% from where you were midday yesterday at 245. So to get over the story, a firm posts wider quarterly loss early after Twitter posting. The firm accidentally tweets their second quarter results snapshot early. They tweet it in the middle of the trading day, and the stock tumbles. It was halted at one point, resumes. As much as 33% on Thursday afternoon after it reported results with a third quarter revenue forecast that missed some of the estimates, a widening net loss. Just hours earlier, investors were given a snapshot of what the company called another great quarter via an accidental tweet, which was enough of a glimpse to send the shares surging. So second quarter results, which it went on to release ahead of schedule anyway, showed a 77% gain in revenue. Net loss, $159.7 million. They only lost $26 million a year earlier, and the market only thought they were going to lose $100 million. They tweeted out at 1:15. So imagine for a moment that you have a really tough quarter, right? You're going to lose $160 million. The market only thinks you're going to lose $100 million. Okay, that's a big problem, folks. Companies exist to make money. That was not a good thing that they had to come up with. The level of carelessness that it must take to tweet this out, okay, excessive, to put it lightly. And, I was reading about this last night. They have big business. They have big business with Amazon. They got big business with Peloton still. No one merchant makes up more than 10% of their business, I believe, is what they said. That way that they're not completely devoted to a company like Amazon or Peloton, as Peloton continues to suffer. Doubled gross merchandise volume year over year. I would be careful of this equity, though, folks, because that is just an absolute blunder. And you look where we've been. We were up to 176. You're talking about basically the lows that we were at last May. We were at $80 and change just yesterday coming into that number. And it's the business plan itself. I mean, I see no reason why why does Amazon need a company like Affirm? Maybe you can make the argument they buy them out or something like that. But why does Amazon need a company like Affirm to handle the buy now, pay later function? Seems like Amazon is a big enough company that they could just subsidize that themselves, allow people to somehow pay in installments, etc. And then when you add on to it the absolute blunder in the C-suite it takes to push out those numbers early at 1:15. I mean, imagine, folks, if you're putting that information into Twitter, just getting the tweet ready or something like that for the post-market tweet, you'd have to be touching it like you're touching a nuclear reactor, man, if you're in charge of that, right? I mean, God forbid you hit the post button and you're pushing the number out there. It just seems like something that carelessness, and then you look at the results they have, probably carelessness going on there as well. But quite a trade, indeed, in terms of to the downside. All right, let's jump around and see what else we have going on. You got other companies out with their numbers today. Yelp out with their numbers, doubled the 14 cents consensus estimate in earnings. They earned 30 cents, better than expected revenue. They're trading higher, strength in its advertising business. It seems like people would be getting back out, right? Yelp's up 8%. If you're a restaurant or something like that, now would be probably the time to push that limit and accelerate and try and capitalize on the rush of people getting back out there. Cannabis. So they were talking about this in the den, maybe looking at some of those pot stocks, maybe looking at some electric vehicle stocks. Aurora out with their numbers. They beat, first time they've been able to exceed estimates in more than a year. Talk about getting slammed, these pot stocks. Quarterly loss of $59 million, substantially less than a year earlier, but they're still losing money. Aurora's ACB. How's that chart for you? Should we chart that? Yeah, not too much to chart on a chart that looks like this, man. These cannabis stocks, you just got to wait until they find something, because, even this stock, right? You come out, you spike to 507, boom, just like that, you're back to 450 on Aurora. Canopy Growth, down 0.5%. They were out there with their numbers Wednesday. Now, percentage-wise, this stock getting quite a pop. But, folks, you got nothing on this equity right now. And believe me, I think these companies can be worth billions, and they should be, when this market really starts rocking. But, you're at $8. Yeah, you're up almost 30% from the lows we had a couple weeks ago. But there's nothing on this chart just yet, folks. It's all negative action from $56 and change. Remarkable. Would not have thought that one. Markets pulling back a little bit. We'll see where the pressure goes today. Interesting, right? It's like, do you want to be long over the weekend with that type of negative action, trading down 100 S&P points from where we were at 10:45 yesterday morning to the close? I'm not sure. And also, 3 o'clock, the Fed comes out with, I believe it's purchase plan for the following month. So that could provide a little bit of volatility. I was listening to that on Bloomberg early this morning, talking about 3 o'clock. Could be something that you look for if they're going to really be in dire strait, but I don't imagine that's the case. And when you get back to the article here talking about Fed doesn't yet favor a half-point hike or an emergency move. So this is not an opinion piece over in Bloomberg. I was trying to read it out. I was looking for, did Chairman Powell come out and say this? No, he did not come out and say this, but he's looking at basically what the Fed is saying. All right. And you got to have a consensus if you're going to do this. And there was a Fed governor out there, but they go down to talk about San Francisco Fed President Mary Daly said yesterday, a half-point rate hike is not my preference. Okay, that's speaking of market news. She cited the lingering drag of the pandemic and the fact that the Fed is already sending a clear message on its readiness to act. Markets have already priced in the withdrawal of accommodation, and that is them hearing what the Fed is clearly communicating. Then you have Thomas Barkin. He's the president of Richmond Fed. Similar view. I'm open to it conceptually. He said of a half-point move. That was Thursday at a virtual event hosted by the Stanford Institute for Economic Policy Research. Do you think there's a screaming need to do it right now? I have to be convinced of that. It's going to be a huge data point, folks. March 10th. Put it on your calendar, March 10th. Make sure you're ready to trade leading up to that day. Make sure you're ready to trade in between March 10th and March 16th when the Fed next comes out with the potential for their hike. Powell's aiming at a rare soft landing. I just think the article makes some great points in terms of Chairman Powell. One thing in particular, he has tried to forecast where he's going to be. This would be a dramatic break in terms of him trying to forecast where they're going to be. The January data offered some evidence of broadening price pressures with an acceleration in costs for services unrelated to supply chain issues. However, a month of data isn't likely to push officials to an inter-meeting hike. But boy, we get two prints like that, folks. I mean, if you get an acceleration on a month-to-month basis, right? 0.6 month over month. Think about it. Think where prices were in December. And on a monthly basis, we went up 0.6%. We went up on an annualized rate of 7.2% from where we were in December. Prices have already gone up in December, and we're still accelerating. So all the attention is going to be on the February number, March 10th. Stay tuned, folks. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Jumping around the market, we got Amazon shares down about 0.9% right now. You get the NASDAQ 100 dipping into the red. We're negative 40 points in the NASDAQ 100. That's about 0.3% in the red right now. You jump over to Big Dog Apple. Apple right now back to a 15-minute. We open higher, make it above 173. You're now negative by 31 cents at 171.81. You jump over to Microsoft, down about the 10th of a percent. We jump to Tesla shares. Dropping a bit, down about 0.4%. We jump over to the companies that had their numbers. Zillow giving back some of the gains, but you're still up about 11% on their earnings right now. You jump over to Expedia, EXPE. Ooh, there's a give back for you. Up 2.5%, but giving back more than $10 of the gains it had last night. You're trading at 202, still 202 all-time high right now outside of the action today. Never traded above 200. Up until yesterday for Expedia. So quite the acceleration there. All right, what else we have going on? GoDaddy was out with their numbers as well. URLs, they beat estimates by 11 cents. Quarterly earnings of 52 cents a share. $3 billion share repurchase program. Not bad. Market always loves that. Remember when they first came out and started doing those Super Bowl ads? Gosh, how long ago was that? Backing this thing up to see the action. Yeah, they go public in 2015, and this thing's just been chopping around at the same price for basically 4 years, between about $60 and $80 to $90. GoDaddy, though, up 9% on their numbers to $80. All right, jumping to the Olympics. A sad story here. Mother Russia, man, Putin, watch out for this guy. Doping hearing to decide Russian skater Kamila Valieva's Olympic fate. I mean, this poor girl, she's 15 years old. Seems like she had a positive drug case for doping. And it's just a sad deal, folks. Anytime you have a 15-year-old, they actually can't name her, I was seeing, and part of it, because she is 15, it becomes an aggravated case, as it should when they're under 16. Russia can't even compete in the Olympics right now. Because of the fact that they got caught doping so much. Now you have even the skaters or even the citizens are allowed to compete under just the Olympic flag. I mean, it's just a sad deal. You got 15-year-old kids over there. Obviously, it seems like they've been caught doping, and you know that that's not their fault. Just another black mark on Putin, man. He is a bad, bad dude in many ways. Doesn't care who gets in his way, in terms of that comes down from up top, folks. You are not in Russia, and you do not start a doping run with 15-year-olds that make it into the Olympics without making sure that that's coming from the top. And I think would all agree on that one. All right, S&Ps, back to the market, up 7 points right now at 45.04. You're up 0.2%. We look where we were overnight. You're talking about gaining 50 points to 45.05 right now. Let's jump over to the gold contract. Gold trading at about 18.31. It's going to be interesting to see where we go towards the end of the day right now. We jump over to the VIX. Quite a spike in the VIX yesterday. We give back some of it, but you're still basically right where we were as of the close yesterday with an elevated VIX near 24 right now. I'm going to jump over to Gilead, right? Is that how you pronounce it? Or Gilead? This is a chart. They were talking about it over in the YouTube Tigers Den. Man, talk about a give back over the last year. You're down to $62. The reason why I want to bring it up in particular, and this is why, folks, never get married to stocks, right? This stock, a biopharma company, you're valued right now at $77 billion, all right? I jump over here during the break. $78.3 billion market cap right now, trading at 62. Well, you would double that back in 2015. So your money's been cut in half over 7 years. You've been chopping around basically for about 5 years from 2017. If you are looking for an entry in this equity, though, seems like you're coming down to an area that has been an area of support. You did make it down towards the end of 2020 to under $60. Maybe you had a low of 57. The actual low, I think, 56 maybe. And that's from December of 2020. But yeah, it's nearing that area. I don't know if I'd be buying this thing unless you're looking for maybe some dividends. Maybe you're looking forward to chop around between 60 and 80. But man, quite a chart for Gilead to pull back. You talk about some pullbacks, man. We check out some of the tech companies and look at the rebounds we have going on. You got Zoom up 3.4%, man. Some of these equities, folks, you're looking for entries. You got Zoom at $150. You came into the pandemic and you were at 103 in 2019. I would imagine they've picked up some business and accelerated over that time. You're trading at 150. Obviously, 600 was too high of a valuation for a company like Zoom. Roku was another one that comes to mind. You back off basically to where this thing was trading at in 2019 from 490 down to 168. Longer term, they're probably a player. You could always have that company getting purchased too. Not sure that's why we'd be buying it. $22.6 billion. But man, you look at the reach that some of a company like Roku has into the households. We got like 4 Rokus in my house, folks. We don't have cable boxes. We operate off of Roku. Sure, there's many other households like that. $22 billion is not out of reach when you talk about what it may do for a tech company in particular. Peloton, you're down 1% right now, quite a week for them. You back it up. I mean, there's a pop for you. Doesn't mean we can't get back down to $22. But when you start thinking about just the context of a company that's valued at $12 billion, okay, you made it down to a low of $23. So you were trading at about a market cap valuation of $8 billion. I mean, you got to do risk-reward analysis in your head, folks. You have a company like Peloton, traded at $8 billion, okay? Yeah, maybe you get down to $5-6 billion. Maybe you get down to $4 billion. Peloton's not going to be trading at $900 million. It's a brand that's worth more than that, especially for some of the tech companies. I don't think it would get back down to $5 billion was going to be my point, right? Maybe it doesn't get back down to $8. Because maybe that's where the market saw, hey, guess what? Their phones are already ringing with people that might want to purchase them, like Amazon, Nike, Netflix. There's a bunch of companies that could benefit from having a Peloton brand with users rolled into their subscription service, like Netflix, like Amazon, just rolling it into Prime, etc. So keep that in mind when you get pullbacks like this, especially if you're talking longer term. You got to believe in the company because some of these stocks go to zero. That's your disclaimer, okay? If you're buying Peloton shares, you're buying it at 23 when this thing just dropped from 120, you better make sure that that's risk capital. That's the other side of that trade. You want those types of returns. You're going to be dealing with more volatility to get those returns. You can't look for 20% pops in stocks, folks, and not think that you're taking on more risk than buying a company like Pepsi or Coca-Cola, etc. And this market is catching a bid, folks. I mean, the Dow is only 1,500 points off of all-time highs. Think about that. 35,305 right now on a longer-term basis. Yeah, we're in a consolidation. Maybe we've been in a consolidation for the Dow for about 10 months since April last year. We jumped to NASDAQ 100. Back that off real quick. Take a look. NASDAQ 100, about 2,000 points off of all-time highs. But you're only back, folks, to where we were trading at October 11th. Things were pretty good on October 11th, if you remember where this market was. So keep that in mind as well. We have the S&Ps up 18 points, Dow up 160, Russell up 13 right now. We jump over the VIX as this market climbs higher. VIX trading at 2383. We'll be right back, folks. We got one more break. I'll be right back to finish up the show. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P up 14 points, NASDAQ 100 up 10 points right now, the Dow up 155. Folks, you just heard that commercial for Tiger First Mortgage. My dad putting that commercial out there, having to do with 7% a year, okay? And for that, you're lending money. You're lending money with a secured investment with buildable property in St. Petersburg. Of course, there is a risk, all right? If you're getting 7%, that's a much higher rate than the guaranteed rate of interest that you get with an FDIC-insured bank or with a U.S. Treasury note of any kind. Your risk in that, of course, is that you invest that money, the business would go BK, and the real estate that you own would drop so dramatically that you wouldn't be able to get back the investment you put in, even though it's a debt-to-equity ratio, which I think is very attractive. Now, you can call him, you can email him for more information, okay? The cool part about it is when you start thinking about 7% a year, All right, let's just say that money is in there for 3 years. 7% a year, okay? You got to be at on Amazon, because compounding numbers, when you make 7% every single year, folks, as it adds, Amazon in 3 years has to be pushing $3,868 right now from $3,158. You have to rise $700 in the price of Amazon to achieve a 7% return over 3 years. It's kind of cool when you've gotten the run you've gotten in equities for so long. When you start doing valuations like that, okay, to compound some of those numbers, because it's 7% on your first investment, but then it's 7% on the year 1, year 2, etc. If that adds, you're paid out monthly, okay? So it's not compounding in the same way if you do that, but it's a great deal, folks. If you have IRA money, especially that you don't need, that is tied up there, it's a great deal. For all the details, because there's a lot, it's an investment, give my dad a call. Call the office, 877-518-9190. Leave a voicemail if you'd like. Get in touch with them, or you can email them, always ob1@tfnn.com. But leave a voicemail. It's a great investment. I just think about it, 7%, especially with markets where they are. So there you go. S&P's up 5 points, folks. We got the NASDAQ turning red right now, down 29. The Dow up 90 points. Basil did his show at 8 a.m. That's coming up right now. After that, live programming, folks. Larry at 11, Fast Market at 12. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Friday, buddy.